we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look first at the global markets. The US markets were down in trade but managed to recover at the end of trade. So it was basically a V-shaped recovery that happened as far as the US markets were concerned. Europe as a whole didn't do well. It was down close to 1.5% on an average. Asia is managing to look good. The Nikkei has managed to move into the positive territory. Hong Kong has become flat in trade. The other markets also trading with a slight positive bias. But the big problem is here where the S6 Nifty is indicating a gap down of almost 160 points. Obviously, Urjit Patel resignation and the upcoming state election is something that you need to watch out for, and that will have an impact because the rupee 1 month forward has reacted very sharply. The other factor is how did the ADRs pan out in trade. All the ADRs ended with a negative bias, but especially the banks. ICICI Bank and HDFC Bank were down almost 5% in trade, given the fact that the rupee did manage to spike and Urjit Patel resigned. The other factor is how did our markets pan out in trade. The Nifty was down over 200 points, but equal brutal selling happened on the mid cap and the small cap end of the market. Even the Nifty Bank, the Nifty PSU Bank, all of them ended with a negative bias. The two sectors which actually saw significant amount of selling was the real estate sector and the pharma sector, down close to anywhere between 2 to 3% in trade. As far as fund flows are concerned, FIs were net buyers, but minuscule buying. DIs were net sellers to the tune of 140 crores. How did our market pan out in trade? The Nifty was down 200 points. Basically, the large caps or heavyweight stocks, Reliance, HDFC, L&T, all of them contributed negatively. Some of the counters which have very low weightages on the Nifty, except for Maruti, Indian Oil, BPCL, Coal India, all of them reacted positively but couldn't move the needle for the Nifty. On the commodity side, what are we seeing? We saw that crude managed to bounce back above the $60 barrel per mark in trade. But remember, it was down almost 3% in trade overnight. Base metals on the LME were trading weak, absolutely weak. All of them ended with a negative bias. So if you can see across the board, there was selling that happened. China, it's a mixed bag. Aluminium is up in trade, but steel rebar is down almost 1.2% currently. As far as the F&O market was concerned, both on the Nifty futures, the Bank Nifty futures, there was long unwinding that was seen. Open interest down 2% and 20% for the Nifty Bank. If you're looking at where positions are being taken, 10,000 to 11,000, that's the broad range that the market is looking at. But there is support coming in at 10,200 and then 10,500. Now, what happened? And call writers are active at higher levels. Now, what happened is yesterday we closed close to the 10,500 mark in trade, where we saw there will be support that came in. But because of the big move that is expected today on the negative side, 10,400, 500, 600, 700 high levels, put writers will be forced to shed position because we will open somewhere close to the 10,300 mark in trade. So put writers will actually shed positions in open interest, and pretty much a similar case will happen, but at lower strike prices. That's something that we can expect. There are two stocks in the F&O band, Adani Enterprises and Adani Power, and both of them were down 6% in trade. The PCR both for the Nifty and the Bank Nifty came down in trade. Now, if you're looking at stocks that are in focus, which moved on high open interest build-up, you had counters like Jet Airways with saw fresh shorts, except for an IGL which was marginally flat in trade. The other counters saw fresh shorts. And as far as positions on the open interest decline is concerned, you have counters which actually moved. So apart from Ramco Cements and Bharat Electronics, which saw long unwinding that came in, the other counters saw short covering on open interest decline that came in. But these are all the domestic cues. Let's go across to Paul Allen for all the top international headlines.
A judge in Vancouver has signalled opposition to a bail request by Huawei CFO Meng Wanzhou. He voiced doubts about the suitability of Meng's husband to stand surety, saying it's impossible to guarantee she wouldn't become a flight risk. Meng's lawyer had said her husband would post bail equivalent to $11 million to gain her release from jail. The hearing will resume later on Tuesday. Theresa May heads for Europe later today after bowing to her critics at home and postponing a crucial Brexit vote in Parliament. She'll hold talks with Chancellor Merkel in Berlin after meeting Dutch Prime Minister Mark Rutte in The Hague. Faced with almost certain defeat of her much criticised deal, the Prime Minister says she'll seek what she calls assurances from EU leaders, yet she gave no indication of what that means.
But notwithstanding that fact, for as long as we fail to agree a deal, the risk of an accidental no deal increases. So the government So the government will step up its work in preparation for that potential outcome, and the Cabinet will hold further discussions on it this week.
A new survey suggests Italy is sliding towards a potential slump. Barclays and Bloomberg Economics expect a contraction in the current quarter, which would tip the country back into recession. Expansion next year is forecast to be less than 1%, and such an outcome would have grave implications for unemployment, credit ratings, the banking system, and Italy's desire to tackle its huge debt load. Fugitive NSA contractor Edward Snowden has added his voice to calls for Google to stay out of China. Speaking on the eve of CEO Sundar Pichai's testimony to Congress, a coalition of human rights groups and activists, including Snowden, want more details of Google's potential plans. The company is being asked to promise it won't create a search engine that could aid censorship and repression in China. Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Here are 5 reasons why the numbers that come in today matter. In the 3 states of Madhya Pradesh, Rajasthan and Chhattisgarh, you have BJP governments at the state in MP and Chhattisgarh for the last 15 years and in Rajasthan for the last 5 years. So this is seen as a mandate not just on those chief ministers, but on Mr. Modi and his central government for the last 4.5 years as well. Remember, these are 3 states where out of their 65 seats, 62 went to the BJP in 2014. Can that be held together? That's one. The second, these are agrarian states. So if there is any sort of farmer distress that's translating into votes against the BJP, which could happen elsewhere in the country, this is where today we'll know whether those votes are going against the BJP. That's the second thing to watch out for. Third, these are head-on contests in these three states between the BJP and the Congress. So Rahul Gandhi's potential as a leader who can take on the BJP and Mr. Modi's election machine is being tested today. That will translate into whether he can get more allies in the future in the next 6 months. On the point of allies is the fourth. The TDP and the Congress is a recent alliance that's come together in Telangana. That's being tested. Whether the Congress and the TDP, like other allies perhaps in 6 months from now, can come together, form alliances and convert that into victories, that's being seen. The fifth one, like the states that are going in for results today, you have other states in 6 months from now which will have BJP governments in the state and the center, and these are states that the BJP swept in 2014. Uttar Pradesh, Maharashtra, Haryana, Jharkhand, Bihar to an extent where they've come together with the JDU in the last 2 years. So the formula whether a BJP government and the center is at the center in the states is something voters vote for in 6 months from now is also something to watch out for very closely today.
I was under the impression that at the last meeting, many of the contentious issues were resolved, even though there were some that were left out. I do not know what happened in between.
I'm deeply saddened and shocked that things have come to such a pass. The Reserve Bank had a very, very proud history of stability at the top, and the institution does have great respect both within the country as well as internationally. If indeed it is not due to real personal reasons, there must have been enough pressing reasons for him to take this ultimate step.
Not surprised at all. I expected it on November 19. Government's intention is to convert RBI into a board-managed company. And the person standing in the way are Dr. Patel and his deputy Dr. Acharya. In my view, the government's intention are not honorable. The next appointment of governor will reveal the true agenda of the government.
We don't know what finally triggered Urjit's resignation. But the feeling that was being generated was the government was actually telling RBI the specific steps it should take rather than the problems it should solve. Central banks always have a plan B in place. The real question is, will the backup system be allowed to play its role?
We have had 2 governors who wanted to keep the independence of the central bank. Raghuram Rajan was first and Urjit Patel right now has been the second. So the real risk now, Heidi, is the fact that the government will name somebody who is more compliant with their needs. They want to take some of the excess reserves away from the central bank so that the government would be able to spend it. They also want the Reserve Bank of India to go slow in dealing with the bad loan problem, which is an enormous issue for the economy. Both these gentlemen, one after the other, the two governors, have been very strict in terms of the monetary policy. Their hawkish approach has helped bring inflation down. Now the risk is that there is a reversal, and if that happens, you just spoke a few minutes ago, Heidi, about rupee forwards already weakening. You can have the rupee really drop in the spot market on Tuesday when it opens, and you're probably also going to see bond yields increase and the equity indexes drop sharply on Tuesday in reaction to what happened.
Do investors get spooked by this, though? Can they afford not to be in Indian assets, even if it does appear that we'll end up getting a replacement at the head of the RBI who's going to take a decidedly less hawkish tone than his predecessor?
If a new person takes a less hawkish tone than the predecessor, yes, it is clearly possible that investors can look elsewhere for returns. Keep in mind that emerging markets have still been very much in a correction mode for the last several months. India got a reprieve in the last few weeks because oil prices, which are very important to India because oil is the most important import in the balance of trade. When the oil prices plummeted, the Indian rupee appreciated in the last few weeks. Some of it is going to get reversed because of the Urjit Patel change. And yes, investors are going to look elsewhere if India does not show promise in terms of the change. Also keep in mind that we have already had the growth rate start to come down. So you have slowing growth, the potential for an increase in the inflation rate, and then you also have the situation with a change in the central bank governors.
Well, bunch of news that we're tracking this morning. Titagarh Wagon, where the company has received an order from Indian Railways for around 1,460 for manufacturing and supplying wagons. Second in the list that we have is Lupin, which has received a US FDA approval for Apivaxin tablets, which is used for reducing risk of stroke and deep vein thrombosis. Reliance Communication, that's an ETA exclusive. The development that we have that the company has filed an contempt of court plea against DOT for not clearing spectral sale to Reliance Jio Infocom within a stipulated time. Also, GMR Infra has made it to the list, given that the company's subsidiary has raised around 225 crore through compulsory convertible debenture for investing in its hydro project in Himachal Pradesh. Also, Cox & Kings, where the educational subsidiary, the division, has received an approval for sale of one of its company for around euro 467 million. Now, the company's subsidiary, however, is awaiting a final approval from United Kingdom travel regulator KDDL. That's again in our list, given that the board has given an approval to acquire Swiss watch hands manufacturing company for Swiss franc around 4 lakhs. Also, State Bank of India, which is expected to consider fundraising to the tune of $1.25 billion in its meeting on December 12th.